Most business owners do not have a bookkeeping or tax problem. They have a clarity problem. They have numbers, they have reports, someone is handling it. But when it comes time to actually use those numbers to make decisions, to understand cash flow, or to estimate tax, things don't line up as cleanly as they should. What I see across most businesses is not a lack of effort, it's a lack of structure. Bookkeeping is being done, transactions are being recorded, and reports are generated. But the process behind isn't consistent. So what happens is small issues start to build. Tax get mixed into revenue, accounts aren't fully reconciled, adjustment get pushed to later. None of this looks like a big problem in isolation, but over time it makes the number harder to trust. And once that happens, everything becomes difficult. Decision making, tax planning, or even the basic financial visibility. For bookkeeping to actually support the business, it needs to follow a consistent monthly process. Every month, the same sequence should happen. All financial activities captured in full, not partially. Transactions are categorized properly, not just quickly. And accounts are reconciled completely, so the numbers match reality. And then adjustments are made to reflect timing, obligations, and actual financial position. When that process is followed consistently, something important happens. The numbers stop shifting. You are no longer working with estimates or partial complete data, you're working with something stable. This is where tax season becomes easier to manage. Most businesses treat tax as something that happens as filing. But by the time you file, most of the outcome is already determined. Tax accuracy comes from how transactions are recorded during the month. If GST or HST is handled properly, if liabilities are tracked consistently, if input tax credits are captured as part of the process, then filing becomes straightforward. If not, tax becomes reactive, and that's where you see surprises. If you're running an e-commerce business, this becomes even more important because your sales do not match your bank deposit. You have fees, chargebacks, refunds, and timing differences. If your bookkeeping is based on what only hit your bank, you're missing part of the picture. That's where margins becomes unclear. Not because the business isn't performing, but because the numbers aren't structured to reflect what's actually happening. When e-commerce bookkeeping is done properly, that gap is explained, not guessed. When bookkeeping and tax are structured properly, the experience changes. You stop guessing the number, you can look at your reports and understand what's happening without needing to validate everything. Tax becomes something you can plan for, not react to. Cash flow becomes easier to manage because you can now actually see where things stand. If you're not sure whether your current bookkeeping setup is giving you the level of clarity, it's worth taking a closer look. Because most issues don't come from what you see, they come from how things are structured behind the scenes. If you want, you can book a free diagnostic call and we can walk you through the setup and see where things stand.